Well, thank you so much for joining us today. It's Thursday. Glad you could be with us. I'm Marlon Bowling, your tour guide to the ag commodities. And Thursday means it's weekly export sales day, and today is no different. I have Brian Hoops on the line. He's the president of Midwest Market Solutions, and he joins us right now to kind of sort through some of these weekly export sales numbers, and we'll see what, if anything, they mean today. Brian, good to have you with us. Good morning. How are you?
Hey, good morning, Marlon. I'm great. How are you doing?
Well, I'm doing fine, thank you. I want to get your take on these numbers here. Let's bring these up on the screen, and we'll take a look at the first batch. On the corn, we had 1.17 million tons that were sold last week. It looks to me like the range of guesses by the trade was between 700,000 and 1.4 million. So if that's the case, score. This is right in the middle. Let's look at soybeans, 644,400 tons. The trade was expecting 600,000 to 1.2 million. Well, that's on the low end of expectations there. Now, soy meal came in at 182,600 tons. That was pretty much in the middle of expectations, maybe in the lower half. Soy oil, 1,900 tons were sold. The trade either expected none or maybe as much as 10,000. So you never know on soy oil. That tends to bounce around a lot. The wheat, 150,900 tons this past week, right at the lower end of expectations. And all in all, I don't know if it was a real enticing report for the bulls here today. What do you think about this?
Yeah, so your corn number was good, but all these numbers, corn, soybeans, wheat, were down from last week. And if you look inside the numbers of the soybeans, I think there's some really interesting maneuvering going on. Because we saw what that works out to be. I got to look here, 16.9 million bushels of soybeans sold last week for the old crop. But you also had China coming in, and they bought over 19 million tons of soybeans on their own. And 12 of those, of that 19 million, 12 million was actually switched from an unknown destination back to China. Plus, you had an unknown destination canceling purchases last week. Over 14 million bushels were canceled, and that likely ends up being China as well. So you really had a lot of maneuvering. That unknown destination, that unknown category really moved around a lot. Over 26 million bushels last week, either canceled or switched to China. And of course, we ended up being China with the biggest buyer by far and away. But they also look like they canceled some soybeans. So, this time of year, we do start to see the cancellations develop as product from South America becomes available. And that is just going to be a little bit later this year than what normally is. It's going to be February, March before that product is really readily available and able to hit the market. We did hear about a week ago, China had bought 7 cargoes of beans out of Brazil, and this could be a cancellation of those previous purchases from the U.S. and switched over to South America. I thought it was also interesting in the report yesterday, USDA lowered production in Argentina from 45 million tons down to 41. This is soybean production. But there's private firms, including Rosario Grain Exchange, who also yesterday came out with their estimate, and they are at about 34.5 million tons of production out of Argentina. So that's a lowest level in 14 years. Likely to see the USDA bring these production numbers down in further reports, but it may be slow coming, but that should be a supporting feature to soybeans.
One thing I wanted to point out, Brian, this would have been the export sales report for the time period covering January 27th through February 2nd. And that would have been basically the week before the Chinese spy balloon episode here. So I wonder what the numbers will show next week. Post-balloon, let's say, and that could be kind of a telltale sign too. So, Brian, I'll leave it there for now, and then we'll come back in a moment and we'll talk more about some of these numbers, and we'll take a look at the overnight trade as well to see just what's going on. All right, so the Globex trade, as we wrapped up the trade after these weekly export sales numbers came out, just wanted to review real quickly here. Had a little bit of softness on the corn overnight. It really didn't change much after these numbers came out. March corn was down a penny, and we had December down 0.75 cents on the soybean trade overnight. Here you have the nearby March contract 7.5 higher, as Janet mentioned earlier, 15.27 and a quarter was the last trade there. And on the new crop November contract, it was a penny and a half higher this morning. Meanwhile, on the Chicago March wheat, it was a half-cent higher. Not a lot going on there, just mainly fractional gains. And in Kansas City, it was down 4 cents overnight at 8.92. The spring wheat trade in Minneapolis, we had March down 3/4 of a cent. Now let's go back to Brian Hoops and talk about the beef and pork numbers that came out this morning. Let's go ahead and run through these. So, Brian, on the beef side, I see 16,400 tons were sold last week. Pork, 28,800 tons. So that was off of our recent pace on the pork, but still not a bad number. And I see China was back in as a buyer again.
Yeah, I noticed that too. They were back in buying pork. I didn't see that they bought any beef. Our beef sales and pork continue to go to Mexico, to a lesser extent to China, and then you also have some of the countries like South Korea and Japan. But yeah, overall the sales were a little bit slower than last week for both beef and for pork. Cash markets, we really haven't had any cash cattle trade in the Southern Plains developing yet. There were some sales on the Fed Cattle Exchange. About 395 head is all at 159. That's about $1 better than last week's trade in the Southern Plains. But I'm hearing feedlots still looking for 161 to 162, and the Packers, maybe for the third week in a row, are going to go into the weekend with very little cattle bought and a lot of trade occurring after the closing bell on Friday afternoon.
Wow, it seems like a little bit of a tall order after we had some at 159, but we'll see who wins out. Just to recap where we closed yesterday on the futures trade with our quotes provided by Bar Chart. On live cattle, we were mixed. We had April just up a dime at 163.70. The deferreds were a little weaker yesterday. On the feeders, when we wrapped up the Wednesday trade, April was 62 lower at 190.72. Not a lot of change when you went beyond that. And if you went to lean hogs, they had an up day yesterday with the April contract up 80 cents at 84.07. It was interesting where the most strength was in the deferred contracts. And again, typically, that's not a real bullish sign when you have the back end leading the charge, but that's the way they finished up yesterday. Brian, I appreciate the information here this morning. Thanks for helping us navigate these export numbers.
Have a good day.
All right, Brian Hoops, Midwest Market Solutions, with us here on a Thursday morning. Janet, let's look at the markets. I don't know if that'll mean much for today's open. They didn't seem to change much after the numbers came out, so we'll see here in a few minutes.